to start a laundromat business. Now, how am I going to start that? First of all, I have to create a financial model for it. Before the business plan, I need to create a financial model. So I'm going to just mention that I wish to start a laundromat business in New York. And when I press enter, it's going to generate the business plan. It's gonna use Perplexity. It's gonna use Claude and other AI to figure out what are the stuff that we need to invest on in order to build this financial model. How do I start the laundromat? What sort of machines do I need to buy? What's the cost of those machines? What's the lifespan of those machines? Then after taking all this information, it's gonna calculate the depreciation. It's gonna calculate the capex. It's going to create the income statement, the balance sheet, and every other financial stuff or statements that are required to create the overall financial model. That's the first step. And in the next step, we're going to create the business plan for this particular uh, laundromat. So first the financial model, which is like the structure of the overall business, and then we create the business plan. So the model is created already. Here's the model. Now, based on this model, the business is going to reach break-even point by year two, which means it will be profitable by the second year, and it will have a net profit of roughly $170,000 by year five, with a total investment of $200,000. Now, I'm going to play around with the numbers, the input figures, and the assumptions to show you how simple and easy it is to change the numbers here compared to a Excel sheet, which is much more complicated. You need financial knowledge. You need knowledge on how to balance the balance sheet, how to create the cash flow statement. All these things are taken care of in this particular tool. So let's start with the growth and marketing section. So the growth and marketing section basically deals with how much money you are spending on promotional budget, which will drive your revenue growth. Which means the more you spend on promotional budgets, the more customers you have, and as a result, the more revenue you can generate. For example, in here, let's say I start this business during 2026. So that way the launch year will be one. Now if it takes me like at least 1 year to prep the business, then I start the business from second year, or revenue starts coming from the second year, then I'm going to mention two in here. So if I mention two in here, as you can see, the whole profitability changes. Let's say I start planning the business right now, and it takes me till next year to buy all the machines, set up all the machines, and start making profit or generating revenue. In that case, I can write just mention two here. It could for some businesses it could take even 2 years to start. In that case, I'm gonna put three in here. Anyways, for this particular case, let's put one in here. Now the initial or organic customers is 50. So these 50 customers are customers on whom I did not have to spend any marketing budget. Then we have organic growth rate. So if I start with 50, and if each year the number of organic customers increases by 20%, then this is the scenario. And let's say that if it increases by 50%, then as you can see, everything changes. Now we have churn rate as well. So all the customers that we are getting, some of them, all of them are not going to be with us for the long term. Some of them might leave us. So let's say if the churn rate is like 5%, then it affects the net profit. If the churn rate increases to like 35%, then it decreases the net profit. That's how the whole thing works. So you can make necessary changes in here. And in this particular section, we deal with the paid promotions. For year one, the promotional budget is 12% of the amount of money you are investing, which is this one. And from the ongoing years, it is the amount of money we are going to invest during those years, plus the cash flow of the previous year. For example, let me just show you. If I visit the cash flow statement, here is the cash flow. So this is the first year's ending cash balance after I have invested everything in the machines, into the machines, after I have spent on the operational activities. After spending everything, I'm left with this. So for the second year, what's going to happen is that we have invest financing activities. So in the second year, let's say I invest additional 300,000. Then that 300,000 will be added to this particular number, and then multiplied with 12% in here to give us that year's promotional budget. the ongoing year's promotional budget. So this is how the whole thing works. And here are the marketing channels. For example, for Google local ads, we have a estimated of a CAC of $20, and 40% of the total marketing budget will go into this particular channel. Based on all these factors, we have this profitability. Now let's say I increase the customer acquisition cost. Then as you can see, the net profit changes. This is how the whole thing works. You can look at the real time results very easily. Now let's move on to revenue and direct costs. So uh, in case of revenue and direct costs, the revenue section mostly consists of the revenue sources which are generating which are generating revenue for the business. Now for this particular example, we have self service, wash and full service, and if you want to add more stuff, you can just click on AI suggest, and it's gonna add more revenue sources. It takes a couple of seconds to generate the revenue sources. So as you can see, vending machine, laundry. If you want to remove anything from here or make or edit something in here, you can do that as well. For example, let's say that this is going to be premium pickup only, and for the costs of each of the revenue sources, you can just click on this, and the costs will be generated as well. So we have the direct cost as well in here. So you can add this also. This will also have an impact on the revenue. Now, if I increase the direct costs, so direct costs are the costs which increase or decrease with revenue. So if you have more revenue, then the direct costs will increase. For example, for self-service wash, if you have more self-service customers, or if you generate more revenue from this section, then your direct costs will also increase as more detergents are gonna be used. Now let's try to make some changes to the direct costs and look at what happens. So instead of zero point 0.5, let's make it 1. As you can see, it has a direct impact because 70% of the revenue comes from this, and each of the customers are buying this service 52 times per year. You can also make changes to this. So all the other revenue sections work in a pretty similar way. Then we have operating expenses, which are mostly fixed costs. For example, rent, salaries, insurance, this sort of stuff. These numbers are in monthly base or are on a monthly basis. So $5,000 per month. If you click on if you put your cursor on this, you will get the explanation how every input field works. Then we have capex and investment. This is a pretty important part of the model. So we have equity injection, debt interest rate, payback period, so on and so forth. Now let's say we increase the debt to, like, okay, let's keep the debt as it is. Let's increase the interest rate. Let's increase this to like 16%. As you can see, the net profit goes down. Uh, if the payback period is increased to like 10 years, this will increase the net profit because it will have a positive impact on your cash flow. If you can pay off the loan in 10 years versus 5, then over the first 5 years, the strain on cash flow due to repayment of loan will significantly go down. Then we have the investment items in here. For example, the industrial washer dryer. If you want to add more capex items in here, you have the option to do so. And you can change the lifespan, which will directly impact the depreciation cost, which is directly included in the income statement, cash flow statement, and other necessary parts of the financial model. Now let's look at the financial statements. As you can see, the business will become profitable by the second year. If you make changes to the input fields, this will change obviously. The capex could be during only the first year, and it could also be during the first year, second year, third year, depending on your choice. Let's say you want to spend some money on the during the first year, and you want to add more machineries over the consecutive years, you can do so. This is the cumulative cash flow. These are the gross margins. The net margin will be negative during the initial period, for obvious reasons, and over time it will increase. As your revenue increases, your fixed cost remains same. As a result, it has a positive impact on your profit margins. Then we have EBITDA and other metrics in here. The most important metrics in here are the three statements: the income statement, the cash flow statement, and the balance sheet. So as you can see, the balance sheet is already balanced: 143, 143, 180, 180. Whatever changes you make across the input fields, the balance sheet will be balanced. You don't have to worry about it. Then we also have sensitivity analysis. This is the base case. Then we have the optimistic case and the pessimistic case. Then other metrics are here as well, like the ratios and all the other stuff. Now if you want to export this in Excel, you have the option to do so. Also, you can export this in PDF. You can do both. So this is how it looks in PDF, and you can also export this in Excel. You can also share this model with a colleague or someone you want to share them. There's view only, just like Google Sheets. You can share it in view only mode, or you can share it with edit mode, whatever you wish. So that way they will be able to look at the model based on their access level. So this is how the whole thing works. Now let's move on to the generate balance sheet, generate a business plan. So this is how the financial model is made. Now we are going to move on to the business plan, because before you build any business plan, you need to obviously create a proper financial model. Otherwise, you won't be able to get a high quality business plan. Now let's click on this. So for this, we have to click on generate with AI. After that, it's going to take all the information from the financial model, all the matrix that we have built so far, and it's going to create the business plan. It's going to use Perplexity to get the market data, I mean the market research data, and all the other necessary data that are needed, and it's going to create a business plan. So let's click on generate with AI. Okay, so the business plan is generated already, as you can see in here. If you want to make any changes, you can obviously do that. If you want to upload images in here, you can also do that. You will be easily be able to do that. So all the financials that we worked on has been reflected on the business plan, as you can see. All these numbers are taken from Perplexity. So these numbers are accurate. The market research numbers. This is the TAM analysis, then comparative landscape analysis. So if you want to add or remove anything from here, you have the option to do so. I mean, here is the balance sheet, cash flow statement, and the income statement. If you want to like export this in PDF, you can do that. You can also export this in doc file. So this is how the PDF looks like. If you want to edit more of the stuff, then you just export in doc file. Then you can just work on the exports. So in here, let's say I upload it in here. Let's upload the docx in here. Now let's look at it. So this is how the doc file looks like. These are the h2s. Let's remove this table of content and let's insert my own table of content in here. Let's change the formats and everything in here. Let's change the font to Arial. Let's change this to 1.5. Now let's put. So I can just click here and just type table of content and insert table of content. So everything is gonna be fixed easily. So this is how I can create a proper table of content, because all these headings are already formatted to H2 or H3 or whatever that is required. For example, these are H4s, these are H2s. So the necessary, if you also want to change the heading styles, you can change that. So this is how the thing is created. I'm gonna give you the link to the description of link to this particular business plan. You can check it out.